All right, here's day two of Unit 3. Today we're talking about financial institutions. And don't forget that this is just a fancy word for like different types of banks, all right, different types of places where you can basically go to keep your money. All right, so what a financial institution is, right, is it says that it serves as an intermediary, right? In your book, that's what they call them as well as a financial intermediary. And all an intermediary is it's someone that goes in between two groups of people, right? So we're talking about a bank. Well, it's going in between two groups of people. It's going in between people who are savers and between people who are borrowers. And what it does is the people who want to save their money, well, they take their money and they put it in a bank. And then what the bank will do is they'll take that money and they loan it out to borrowers, right? So realistically, that's how banks are able to pay you interest on your savings account, because what they really do is they take whatever money you put in your savings account and they loan it out to other people and charge them interest. So that's a big way that they do things, right? That's the biggest reason why they're called an intermediary, right? And because of banks, right, our economy, if you remember the circular flow model, right, which we'll talk about that in class a little bit too whenever we get to this, right, they kind of help keep money flowing through the economy. A lot of times this is how households get money, right, to be able to spend it, right? Especially if you don't have the money. Well, I mean, most folks don't have money to be able to build a new house. They have to go borrow it, right? And so that's another way that we kind of keep money flowing through our economy. All right, some types of, um, I guess more or less institutions, right? Banks, really, right? The first one, a commercial bank. This is the majority of financial institutions that you really see nowadays. All right, these are your Bank of Americas. This is your SunTrust, your Regions, your community banks, things like that, right? Savings and loans banks you don't really see as much anymore, but that's, I mean, they are exactly what they sound like, right? They're banks that are specifically intended for you to save your money, right? So you're not really opening a checking account at these places, right? You're just saving your money. And sometimes you have a savings and loans bank, and what they will do is they take people's savings and then they'll also issue loans, right? Again, a commercial bank, just like Bank of America, this is where you get a checking account. This is where you can get a savings account. You can get a loan for a home, a car, all different types of things like that. And then the last one, a credit union. Usually, a credit union, you either have to have a certain kind of job or you have to know someone before you can open up an account at a credit union, right? Like the post office has a credit union and you can only open up an account there if you know someone who works for the post office, or if you're a family member of someone that works for the post office, or you yourself actually work for the post office, right? And like I said, a lot of different companies offer these. You might see the Navy Federal Credit Union like commercials online, right, or on the on TV. Again, it's like a bank, but it only allows certain people to have a membership there, right? Whereas a commercial bank, pretty much, if you have a certain amount of money, they don't really care who you are. They'll have your business, right? But a credit union, you have to know somebody again, or you have to actually work for a certain company before you can usually be part of a credit union. All right, so things that you need to consider whenever you're talking about like actually picking your bank, really your financial institution. All right, things you need to consider whenever you're doing this: the cost, the convenience, and the consideration. And we'll kind of talk through all three of these on the next three slides. All right, so the first one is the cost, right? Number one is what kind of fees are they going to charge you, right? Like, is it going to cost you a lot of money? Do you have to have a minimum balance, right? Like with my bank, right? There's no minimum balance if you have your check direct deposited, right? And a lot of banks have different things like this where you can pretty much get your checking account for free, right? But these are things that you need to check on, right? Is there a charge whenever you use checks? Is there a charge whenever you use the ATM machine? Are you only allowed a certain amount of times to go to the ATM machine? Whatever. These are kind of questions that you need to really ask, right? What kind of interest do they pay on deposits, right? So if you put your money in a savings account, how much interest are you going to earn? What kind of interest rate do they charge on loans, right? And again, these are all things that you need to kind of think about before you choose a bank. Don't just choose a bank just at random, right? You need to actually think about this stuff. All right, the next one, the convenience of it, right? I won't lie to you. This is why I have Bank of America, because there seems like there's a Bank of America everywhere I go. So if I'm in Florida, if I'm in Tennessee, Alabama, Georgia, whatever it may be, there's usually a Bank of America somewhere nearby, right? So for me, they're very convenient, right? But things other you need to like consider is it something close to your work or is it something close to where you live, right? If your bank is 30, 40 miles away, well, they're not very convenient for you. So they better be doing a very good job at either being very considerate or having really good costs or having no fees, right? So again, just consider like, is it convenient for you, right? And then the other one down here at the bottom, do they offer overdraft protection, right? So if you take too much money out, so if you've got $100 and you spend 150, well, are they going to protect you in that case? Are they going to charge you big fees for this? Again, just some things you need to consider. All right, and then the last one, the consideration, right? And for some people, this is a big deal. For some folks, it's really not that big of a deal. But it's kind of the personability of your bank, right? Do they treat you like your family? I guess more or less, right? Do they go out of their way to take care of you, or do they just treat you like any other customer in the world, right? And again, I mean, a lot of folks, this is a very big deal for them, right? I know my mom loves this idea that she's got friends who work at the bank where she banks at, and they can call her and basically tell her that, hey, this is going on with your account, or hey, you're about to be overdrawn. You might want to be careful for a little while, or things like this, right? Does your bank like basically treat you like your family, right? And for some folks, like I said, this is a really big deal. For some folks, this is not all that big of a deal, right? But that's it. Again, this one's pretty short and quick. But as usual, if you got any questions, don't be afraid to ask.